Hello guys, welcome back to my YouTube channel, and today we are going to learn about a very important concept called CDS account. So as always, we are asking ourselves, what is a CDS account? And we can define a CDS account from the keyword which is the CDS itself. Okay, so we have a CDS account and then we have the CDS, which is the system. So a central depository system, the CDS, is a computer system that facilitates the trading and settlement of shares. So, this system called the CDS is a technology that is being operated by another company that is called Central Depository and Settlement Corporation, CDSC. So, for you to trade, you need to open a CDS account. So where do you open this CDS account? You open this CDS account in the CDS, which is the system, which is being operated by an entity called CDSC. So therefore, we are saying a CDS account is just like the same way that you have other accounts that are being operated by technology. For example, there is Facebook, which is the technology, and then you have got a Facebook account. Then there is a banking system, and then you have a bank account. There's also YouTube, and you have a YouTube account, and that's why you are even able to see this video. So when you are trading in the NSE, the Nairobi Securities Exchange, you can only transact when you log into your account and then you start monitoring the market. You start buying shares. You can also sell shares. You can trade shares. You can monitor how the shares are moving up and down, the price changes over time, only if you log in to your CDS account, which you create in the CDS system. So with that being clear, let's proceed to answer some critical questions that usually pop up. So the first question we're asking, why is the CDS vital to the NSE? And we are saying that before the technology of the CDS, it was very cumbersome to buy, sell, or trade in shares. Why? Because you had to walk physically to the offices of the companies being listed, to the offices of the intermediaries for you to buy a share. And once you purchase a share, they will then give you a paper certificate that is showing that you purchased a share. So you will then return with this paper certificate home, you stay with it, and when you feel that it is time to go sell, you return with this paper certificate so that you can sell it, so that you can get your money. Now, imagine all the risks involved in this. The paper could get lost, somebody could steal this paper, or the paper could even get damaged or faded away, or you could just misplace it in a way. So there were a lot of risks. So that is why this company called CDAC came up with a technology that is now enabling us to actually hold these shares in electronic format. So that is why the technology of CDS is important, and that is why it's important for you to open a CDS account in order to start trading in the Nairobi Securities Exchange. So let's go to another concept and ask ourselves, how do you open a CDS account? So we have seen that a CDS is the system and the company is the CDSC. But now to open a CDS account, you don't need to walk to the offices or the headquarters of CDSC to open an account. CDSC, which is the company, has collaborated with intermediaries, which are typically investment banks and stockbrokers. So whenever you visit an investment bank, a stockbroker, an insurance company, any financial intermediary in the country, they definitely have a form that is called a CDS form. And these companies which are licensed to offer this CDS form are called CDAs. So that is Central Depository Agent. So they are agents of the company CDSC. So you walk into the offices, you request for a CDS form, they will give you, you fill it in, and then they help you to activate your CDS account. Now, once you have activated your CDS account, then how do you go about trading in a normal day in the NSE? So for you to trade, you will just simply need to log into your account. Once the CDS account is activated, it becomes linked to the NSE. So when you log in, you are able to see, you are able to monitor everything that is happening in the NSE. You just log in from wherever you are, from your phone, from your laptop, any location that you are in the world. You log into your CDS account and you'll be able to see whatever is happening in the Nairobi Securities Exchange. So you can buy, you can sell from your phone once you are logged in. And so that is very simple as compared to uh, some years back when you had to work with that paper certificate. So let's answer another question. How does the CDS handles settlements? So now that you have logged in and you have transacted, say you bought or you sold some shares, then what happens? Now, the CDS technology is ensuring faster settlement of trades. Once you express interest to buy, the CDS will execute that trade, and then they will try matching you with another person who is selling. And when you sell, the opposite happens. The system tries to match you with whoever is buying. And once the transaction is complete, then the system also communicates with your bank. If you are buying, so they will take money from your bank, and if you are selling, they will deposit money into your bank account. So you can see how CDS has facilitated trading in the NSE. With the paper certificates, it was hectic, it was cumbersome. You had to walk, you had to constantly worry about the paper getting lost, uh, somebody stealing it, or you misplacing it. But with the CDS, you don't have to worry about anything. Just create the account and start trading. And that is the reason why a CDS account is important. And you will always hear people talking a CDS account. Whenever any issue of trading in the NSE comes up, then a CDS account must be mentioned. And so, whatever we are seeing on your screen right now is the reason as to why CDS always comes up in conversations. Proceed with our conversation. We are saying that in as much as CDS technology has improved trading in the NSE, it has not solved uh, a regulation standard that is called T plus 3. In as much as you can trade, you can buy, sell, in as much as you can sell, you can buy, you can monitor the market through the technology of the CDS, there is still one regulation that is yet uh, to make things easier for traders, okay? And it is called T plus 3 regulation. So you log into the system, you buy a share, but it will only reflect into your account in T plus 3 days. So T is the day that you are transacting, and then 3 days are the business days, okay, until your transaction is reflected. So there's a separate video that is explaining the concept of T plus 3. You can check it out. Uh, you can just shuffle through other videos in this channel, and then you will be able to find another video that is explaining T plus 3. But just a summary of it is, if you transact today, like if you have purchased stock today, then today becomes the T, and then you count 3 business days. So if today is Monday, so you've purchased a share on Monday, that is the T. Then now you count 3 business days: Tuesday, Wednesday, Thursday. So the share will reflect on Thursday. And if it is across a weekend, then you skip the weekends, you only count business days. For example, if you have purchased a share on Friday, so the Friday becomes the T, you skip the weekends and then you start counting Monday, Tuesday, Wednesday. So Wednesday is when the transaction will reflect. So this all for this video. It was about learning about a CDS account, why you need it, why people keep talking about it, and then also introducing the issue of T plus 3. So guys, if you found this video helpful, kindly keep it here, subscribe, like, comment, and share. Thank you.